there are a number of REITs that are trading at discounts to, I think what their intrinsic value really is. But that gap has started to close, and we've seen a number of companies see some appreciation in their stock prices. And so there's still a gap, and I think if you were a buyer on the sideline, you think, well, maybe now's the time to jump in.
So what's the biggest shift you're seeing in REIT deal terms or negotiations this year?
There's been a definite recent sort of noticeable uptick in M&A transactions being announced in the space. And I think that's reflective of something that's been a fact for a while, which is that there are a number of REITs that are trading at discounts to I think what their intrinsic value really is. But that gap has started to close, and we've seen a number of companies see some appreciation in their stock prices. And so there's still a gap, and I think if you were a buyer on the sideline, you think, well, maybe now's the time to jump in, for maybe like a take private or something like that. And so relatedly, as we've been working on helping our clients raise capital, something that we're seeing from the investor side is an interest in protecting themselves if there is a change of control in a REIT. And so, they want to make sure that the REIT, they will continue to have a liquid security, if there's a change of control. And if they won't have a liquid security, they'll be compensated for that.
And what deal trend in 2025 or 2026 has caught your attention the most?
I mentioned the recent uptick in M&A activity. That's something that's definitely been noticeable here toward the end of the year. And, I would also say sort of the sort of prominence of sort of specialty asset classes, right? So if you go back even to 2024, that might have been cold storage. We had one of the largest REIT IPO ever in the cold storage sector in 2024. That's a sector that's maybe a little bit disfavored right now, but, that was the story of 2024. 2025, it seems to be data centers, obviously driven by, AI. Very large IPO that got done a couple of months ago as a REIT. If those businesses, the leases are structured a certain way, they can be good REIT assets. So, that's definitely another sort of specialty asset class that, it seems like there's appetite in the public market for. And then another specialty asset class that I would mention that I think a lot of people are taking notice of is senior housing. That's an asset class that has, a lot of promising demographics and sort of secular tailwinds behind it. You have an aging population. I think I read the other day that, the number of people aged 80 and over in this country is going to increase 5% per year for the next 10 years and not going to cap out until 2037 or 2038. And meanwhile, there's been almost no starts in the senior housing market over the past 5 years. So serious supply-demand imbalance in there, and that's really created a lot of opportunities for REITs in that space.
And from a legal standpoint, what are some things that REITs should be thinking about and planning going into 2026?
Yeah, one thing I think particularly for public REITs is, President Trump himself has made announcements about this. The chair of the SEC, Paul Atkins, has made several statements about this, the potential move from quarterly to semi-annual reporting. I have some question whether that's something they can even legally do without congressional action. But I do think, we're going to see some SEC rulemaking in that area probably early next year. And so I think, companies should think about, is that something we would want to take advantage of? Is it something our investors, would be okay with if we did take advantage of it? And then some sort of, other sort of consequences that could come down the road from it. So for example, if you give guidance, how is that going to factor into, a company that's only putting out earnings twice a year? You might need to update that, more frequently than that. And, if you do sort of shelf takedown capital raising, what are the implications of, doing an offering with financial information that might be a little bit stale? So a lot of things to think about there, a lot of things to come. We'll see what happens, but I definitely think it's worth taking a little bit of time to think about it now so that you're not caught flat-footed in 2026.